For decades, the US dollar has stood at the center of the global financial system. It is the world's primary reserve currency, the most widely used currency in international trade, and the backbone of global financial markets. Governments, banks, and investors across the world have relied on the dollar as a stable store of value and a trusted medium for global transactions. But today, a quiet shift is beginning to reshape how money flows across the world, and it could have significant implications for the future of the dollar. To understand why this shift matters, it's important to recognize how dominant the dollar has been in global finance. A large portion of international trade from oil and commodities to manufactured goods is priced and settled in US dollars. Central banks around the world also hold large amounts of dollar reserves to stabilize their own currencies and support their economies. This global reliance has given the United States enormous financial influence for many decades. However, the global financial landscape is slowly evolving. Several countries and economic blocs are exploring ways to reduce their dependence on the US dollar in international transactions. While the dollar still remains dominant, the early stages of diversification are becoming more visible in trade agreements, central bank reserve strategies, and cross-border payment systems. One of the key drivers behind this shift is the desire for financial independence. Some countries want to reduce their exposure to U.S. financial policies and sanctions. When international transactions rely heavily on the dollar and the American banking system, the United States gains significant leverage in global economic affairs. As a result, some nations are exploring alternative systems that allow them to conduct trade without relying entirely on the dollar. Another factor influencing global money flows is the rise of new economic powers. Countries such as China have significantly expanded their economic influence over the past 2 decades. As trade relationships grow between emerging markets, more transactions are beginning to occur in regional currencies instead of the dollar. This gradual change does not happen overnight, but over time, it can alter the balance of global financial power. Energy markets are also playing a role in this transformation. Historically, oil has been largely priced and traded in US dollars, a system often referred to as the petrodollar. However, some countries have begun experimenting with alternative currency arrangements in energy trade. If these trends continue to expand, they could slowly reduce the global demand for dollars in commodity markets. Central banks are also adjusting their reserve strategies. For many years, holding US dollar assets such as US Treasury bonds was the primary way for countries to store national reserves. But recently, some central banks have begun diversifying into other assets, including gold and non-dollar currencies. These changes are gradual, but they reflect a broader effort to reduce reliance on a single currency in an increasingly complex global economy. Technology is another major force reshaping global finance. New payment systems and digital financial infrastructure are making it easier for countries to settle transactions directly with each other without using intermediary currencies. These technological innovations are slowly reducing the friction in cross-border payments, which historically reinforced the dominance of the dollar. Digital currencies issued by central banks are also gaining attention. Governments around the world are researching and testing central bank digital currencies as a way to modernize financial systems. If widely adopted, these systems could create alternative payment networks that bypass traditional dollar-based financial channels. Trade alliances and regional economic partnerships are another factor influencing global money flows. As countries strengthen trade ties within regional blocs, they sometimes prefer to settle transactions in local currencies to reduce exchange rate risks and transaction costs. Despite these shifts, the US dollar still holds enormous advantages. The depth and liquidity of US financial markets remain unmatched, and investors around the world continue to view dollar-denominated assets as safe and reliable. While the dollar remains strong today, the quiet adjustments happening beneath the surface suggest that the future of global money may become more diversified over time, potentially reshaping the international financial system in the decades ahead.